Hello, this is Erin Swenlin with DecisionPoint.com. Welcome to your Daily 5. I'm going to show you the 5 charts that I think you should be paying attention to going into this week. And we have some interesting charts to share. But before I do that, I wanted to let you know that we at DecisionPoint.com have 2 reports. Number 1 is the Decision Point Alert, which is going to give you pretty much what I'm going through on your Daily 5. It's a kind of an abbreviated version of what we do for that. Decision Point Diamonds is our stock picking newsletter, and that gives you 10 ETF and stock picks per week that have been derived from our exclusive Decision Point scans. So we invite you to come try us out. If you are interested, you may want to take advantage of our current Black Friday, Cyber Monday sale that is going on right now. If you are watching this and it is no longer Cyber Monday, just send me an email at support@decisionpoint.com, support@decisionpoint.com. Let me know that you were watching this video and you want to take advantage of our buy 1 month, get 2 free special. And I will set you up if you are watching this recording and didn't have the opportunity to take advantage of it on Cyber Monday. All right, let's start off with the S&P 500 daily 1-year chart. As you can see, we have a nice rally that's obviously been going on since the end of October. And it started with a nice breakaway gap followed by a continuation and now runaway gap. It's telling us that we should expect more upside, but boy, this rally has been almost straight up and has been relentless, really. And of course, we like a relentless rally. But at this point, I am looking for some pause or consolidation. We got a little of that during our holiday trading week last week, but I think we're in for some more. Currently, the market is pretty much unchanged on the day. I'm recording this on Monday. So, I think that there is still a pause, possibly some decline ahead for us. But what you're going to find with all of these charts I'm showing you is that we really have a lot of internal strength going on right now. Everything internally on the market looks very healthy. We have momentum rising. We have an RSI that is overbought, which is a bit of a problem, also calls for that pause or decline. And we have a VIX that is traveling near the top of its range on our inverted scale. So investors are very complacent, very comfortable with the market right now. And stochastics are hovering above 80. There is internal strength here, and we could see prices continue to move higher. And honestly, going into the end of this year, we are in positive seasonality. I'm expecting to see prices continue higher with the possibility of a decline or a pullback possibly occurring in the next week or two. But I think by the end of the year, we're going to be making new all-time highs if we haven't already. Swenlin trading oscillators and ITVM are telling a story right now. The short-term indicators, our Swenlin trading oscillators, are rising. The last they did on Friday, but they had been in decline, very indecisive during this period of, I guess we can call it pause. Wasn't much of a pause, but I guess at this point we can call it that. And so the Swenlin trading oscillators got a little bit uncomfortable. But on Friday, they did turn back up. But the problem we have right now is negative divergences with price. So we have declining tops on our Swenlin trading oscillators, but rising tops on price. And typically this does set up declines. Now, the market is so internally strong, though, I'm thinking we won't have a big decline. I am more of the mind that we'll see more of a pause, possibly consolidation, maybe a bit of a pullback. I'm not looking for a correction here. And I'm not looking for a decline that's going to be lengthy like we're seeing in these areas back here. So we're due for a decline. but I don't think it's going to be painful at this point. And part of the reason is because our ITBM and ITVM are rising so nicely. They are getting overbought, so we are paying close attention to that, which also would be the high sign that we're going to get a bit of a decline or consolidation. The fact that these are getting overbought, but overall they are very strong and have continued to be very strong. More evidence of an internally strong market. We do have to worry about overbought conditions being reached, but they certainly can move higher at this point. Let's look at our bias chart, our Golden Cross and Silver Cross Index chart. So what we do is to determine the market bias is we look at our Silver Cross Index and our Golden Cross Index. And the components that go into determining the Silver Cross and Golden Cross Index are really broken down into percent stocks above their 20%, stocks above their 50-day EMA, and percent stocks above their 200-day EMA. Most of you are familiar with the Golden Cross, where the 50-day EMA crosses up above the 200-day EMA. What we do is we look at all the stocks within the index in the SPY in this case. We look at all of the stocks, all 500, and we determine whether they have a 50-day EMA above the 200-day EMA. Do they have a Golden Cross? And that's what the Golden Cross Index is. How many stocks have a 50 above the 200? Well, right now, 46% do. And the most important thing to note is that last week we had a bullish shift for the Golden Cross Index. It crossed above its signal line, moving our long-term bias to bullish. So long-term, we have a bullish bias now. We didn't have that before. So that tells me the bull market is safe at this point. The Silver Cross Index tallies up how many stocks have a silver cross. A silver cross is where the 20 crosses above the 50-day EMA. That's a silver cross. So we count up how many stocks have a silver cross or a 20 above the 50. And that determines what the Silver Cross Index is. Currently, almost 60% of the S&P have a 20-day EMA above the 50-day EMA or silver cross. This is pretty nice internal strength. It's above our 50% bullish threshold. It is rising. It is above its signal line. And all of that speaks to a bullish bias in the intermediate term. But what about the short term? Well, I determine the bias in the short term based on the amount of stocks above their 20 and 50-day EMAs. Currently, those numbers are above 50%, which is my threshold for bullish threshold. We even have over 50% above their 200-day EMA, which is very positive. So, I mean, at this point, I have to look at the bullish bias in the short term as well. So the market is, if you take nothing else from your daily 5 today, remember that the market right now is very internally strong. It is due for a pullback or a decline, but I do not see a very deep decline ahead at this point because the numbers, the internals are so strong right now. So look more for a consolidation, possibly a pullback. Now, if any news comes out, economic news, something to goose the market, all bets are off. We could see a big decline, but ultimately, if we just keep chugging along the way we are, we should still see higher prices come through, but not until after a consolidation phase at the very least. I would see something like this consolidation phase that we had back here. Things were rising, but things got overbought. And so that was what worked out those overbought conditions, was just this kind of chop sideways. So that's kind of what I'm looking for coming up. All right, let's switch gears and look at the energy sector. I think this one has been the big question mark for a lot of people right now, and I don't blame you. It's looking very interesting, but at the same time, weak. How can it be strong and how can it be weak? Well, what I've noticed is, first of all, I've had a lot of stocks come through on my decision point scans in the energy space, in exploration production, in integrated oil and gas. I don't like what's going on with crude oil still. It still looks fishy. We know demand is going to be picking up for the holidays, but so far it really hasn't come to fruition. And, you know, I still think this is probably a good reversal point for both oil and energy, but it's just taking some time to work its way through. Why do I say that? I see energy as a possible reversal candidate because the PMO has given us this crossover buy signal. Today, however, with the decline that's going on Monday, the PMO has flattened. So I'm a little less bullish about energy than I was when I first saw this on Friday and got that crossover buy signal. We still have a very, very strong in the long-term stocks. 91% have a 50-day EMA above the 200-day EMA. That's a really strong reading, but we're just not getting the kind of participation under the surface that we need to get a good reversal going on. Things are going in the right direction, but they're not in the right direction all the way. So I would say keep this one on your radar. If you want to take a chance on energy, I think you could do that with a tight stop. Just know you're going in early on a possible reversal candidate, and that can be dangerous, especially when we're going into a period of likely consolidation. So just be careful with energy. But I have to say, it was important to note to you that we are getting positive momentum despite the crazy choppy trading that we're seeing right now. Let's look at gold. This is my last chart. And gold is at a decision point. I know I use the name, but it is at a decision point. We're reaching overhead resistance here at 2000. Makes sense that we might have a little bit of trouble to get above this. But I'll tell you what, with interest rates moving lower, the dollar is looking particularly weak, and that's going to do some good things for gold. So I am looking for a breakout here on gold. I think it's going to be good. The PMO has a crossover buy signal right now. Notice stochastics have gotten back above 80 and the RSI is positive. We even have fairly bullish sentiment. There are discounts, but they are, we check the sentiment by determining what the discounts or premiums are on the physical gold trust. If it's selling at a discount, that's bearish. But we're seeing discounts very low. So we're certainly not as bearish as we were back here in October. So I think that sentiment is going to work in its favor, and we will see a breakout here for gold. The correlation to the dollar is starting to get negative again, and that will be good if the dollar continues to show weakness. You can see that gold relative to the dollar is showing internal strength. So everything looks good here to me for gold to break out. Now, if it doesn't break out, that would set up a double top and all bets are off. But we'll see if it can maintain this rising trend, which all of these indicators suggest it will. That is all I have for you today on your Daily 5. I hope you enjoyed watching. Do check us out at decisionpoint.com. And if you do want to take advantage of our Cyber Monday special, and it's Monday, go and log in and purchase. I will add the 2 months to your account afterward. If you're watching this later and still would like the Cyber Monday deal, just send me an email at support@decisionpoint.com and I will set you up with that Cyber Monday deal for another week. Thanks for watching and good luck and good trading.